Good afternoon, everybody. It's 11:10, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. USDA report just was released. We'll jump right in here. Stocks for corn were down about 100 million from where the average trade estimate was, coming in at 8.347. Soybean stocks were 1.845, and wheat came in at 1.087. The much anticipated acreage numbers, corn came in at 90.036 million acres, soybeans 86.510 million acres, and all wheat was 47.5 million acres. Justin will jump right in for some initial thoughts. As we start out here, market's currently down 11.5, up 11.5 for December corn. New crop beans are up 2 3/4 now, 11.86, and wheat's up about 8 to 9. So, Justin, some interesting numbers we look through here. I'll get your thoughts.
Yeah, thanks, Dan. I mean, these are kind of the numbers we were talking about. So we're pleasantly surprised with the numbers. I mean, the total acres down was, Dustin, 6.3. Yeah, that's a little concerning. I would think we see bean acres go up from here, would be my gut feeling. We've heard more switching since the surveys were done asking about prospective plantings. We've seen more switches to beans. I think as farmers have gotten into loan renewal process and money's been tight. So I think beans could be kind of bearish from here, without a major weather problem or a drought. We just raised South American production again. I think beans are going to have a big tailwind from here. I'm not sure if it's bullish corn yet, but I'm also not sure funds want to be short 300,000 contracts with this kind of an acreage number going into planting. I don't know what you guys think.
Yeah, 100%. I think, it is a bit surprising to see total acres down this much. And of course, they're not down in areas that much like the I states. Combined I-state principal crop area is down about 385,000 acres. It's more places like Kansas that's being reported by the USDA, at least on this survey. So it will be interesting to see how that corn acreage number and bean acreage number switches into June 30th. Last year, we had a big increase in corn acreage. We had pretty good price incentive. And then we had input costs dropping in the spring. So I think that's what led to that. Here, we already have pretty low inputs for nitrogen, at least, compared to what we've had the last couple of years. I don't see that corn number necessarily rising unless we get really, really conducive spring weather. So that'd be something to watch. I think the market's responding correctly would be my assumption of what it would do. It's up like 10, 11 cents at the moment of this video. Beans are back up to about up 1 on the day. So it's also a report to just get past. There's obviously a lot of anxiety coming into this report. Growers had a decent rally off the low to sell old crop and some new crop into. And that might have been what we were rubbing up against here last couple of days on that weakness is actual grower selling. To your point, Justin, I agree completely on the funds. You still have to think about what does a 5% or 10% yield drawdown mean for balance sheets. It's not necessarily a slam dunk that we will be at an overly abundant balance sheet. If you take the chances of being up near trend line is higher than being below trend line, then yes, we still have to play that role that we will have abundant balance sheets, through following this summer under normal conditions. But it's certainly at a 6 million acreage drop for total principal acres. It puts a little bit of more onus that we still need to see the yields come in.
Yeah, and of that 6.3, really over 5 of it was corn and sorghum combined, which obviously compete directly for each other. So I think it's pretty friendly corn, honestly. I think we've had some forced farmer selling, a lot of nervousness going into the report, rightfully so. I think like we said, with loan renewals, I think there was just people had to free up some cash. So, we're still going to have some sellers above the market, being the farmer, but I'm just not very bearish here. Corn. I mean, I think, you got Safrina's been kind of dry. You got a lot of stuff to kind of play out here, and we haven't planted an acre of corn yet. So not that we're going straight up or anything, but we may have seen the weakest part for the next couple months at least.
Well, I think we got to keep in mind. Well, we talked about this a lot internally, but like we got to keep in mind that these numbers were put in from the growers by March 1, right? A lot of these guys filled out these surveys in February, a lot before their loan renewals and things, and a lot can change even in that short amount of time. When you start talking about dollars and cost and trying to cut on cost and all these things. So I would be concerned, especially like to Justin's point, if you're a fund that's short a bunch of corn, and you look at this number and then you start to think about what actual planting intentions are, or what, harvested, what that number is. I think that could be trending lower in corn here, over the next couple of months. So, some keep in mind. I think Ben was going to touch on that too, maybe on some thoughts.
Yeah, I agree. I think we've talked about this on the morning war room, and we've talked about the potential of spreading a less amount of money over the same amount of acres, and I think we're seeing that. There are definitely a lot of renewals still going on as we speak, so there's a chance that we could see this get more exaggerated. And I think that leaves a big short managed fund thinking about how they want to carry their risk in the next 3 months. I'm sure there'll be a tremendous amount of updated balance sheets with yield projections now. And the potential is there that they're maybe not as cumbersome. And of course we could have a record yield. So I think that the risk return at this point is somewhat shifted. It is the end of the month, end of the quarter, as far as pricing goes today. And, they may sell it off and put it in the hole today to kind of mark their position end of month, end of quarter. But, Justin brought up the fact that there's still quite a bit of old crop corn to be sold there. So we've made some dents up to 47 there. I take it a small bite at a time and hope that we can, make some new highs above that 45. And
the thing, in my opinion, Ben, is that between now and the June report is a long time, and usually the market's kind of played its hand by then. But I would say at some point between now and then, the market's going to fear that acres go down from here in corn. Might not be today. So in my mind, you're going to start trading what if, like if we were to get into a dicey spring or anything like that, all of a sudden people are going to run numbers like, okay, we were trading a 3 billion carry out. What if it's 1.6 again?
Yeah.
Right. And if Safrina steps into it, if they stay dry, I just feel like corn they could have a bad trade on the way people are sitting.
Well, I think that, to articulate in my simple mind terms is, it's certainty versus uncertainty. And until we got to this juncture and until we put a crop in the ground, we had a certain that we had plenty of corn and the grower was undersold. And that paradigm starts to switch a little bit to a little more uncertainty. And a short trade with that risk above your head starts to be more uncertain as we approach those planning numbers in late June. And we don't know what the weather variable outcomes are for corn.
Well, especially if Jason and I were talking about this today, especially if you get into a situation where the banks put farmers in a situation, it's not the bank's fault, it's the farmer's fault. But if they put farmers in a situation where they don't have enough money and you have to plant more beans, for example, even though you don't want to, it might be one of those things where it's really hard to buy those acres back because it's a cash crunch.
That was going to be my question, Justin. What's a number in new crop corn that's going to flip this script, if any, as we go through?
It's a timing issue, so it's a tough one. I mean, usually you could rally corn 50 cents, you get guys to switch, but if you're on the page where the cash crunch is real, which it feels like to me, that could be a lot harder to do than traditionally. And you're starting at a 2.56 ratio going into yesterday's close. So you're talking about, in my opinion, you have to go to a 2-to-1 ratio quick if you want a real switch.
You just a big flat price move in corn, I would say. Like
Well, that could be that's $5 and $10 or some version of that, right? So I think it's going to be tougher than we think to get a meaningful switch with the cash situation that we have going into this year.
Well, and Dustin, I think we've made this a point from quite a few war rooms is that, $5 futures for new crop corn still doesn't move the needle in terms when you're looking at overall cost of production, right? I mean, with costs where they're at.
Yeah, if you're using like U of I numbers or Purdue numbers, absolutely. That's and we've seen that anecdotally. Obviously, there's growers out there that can make plenty of money at $5 corn. So I think some people are hearing that and saying, I don't understand that. But it's just if you look at the average U.S. grower, we need above $5 corn at target yields to make that break even. So,
well, and Dustin, we've talked about this too. It's, most of our clients, I think Nick brought up a good point right there, but rotations we've gotten into really good rotations for a lot of our growers. So it's really hard. We don't see the kind of switches we used to 15 years ago or 10 years ago. When you have a good, fertility program and you have a good rotation that guys like, I mean, our farm included, it's just maybe you switch 100 acres here or there, but you don't go switch a 30-year production. So I'm not trying to make a raging bull argument here in corn, but I will say that I think we've seen a lot of the most bear stuff come our way for now. Now, weather could be perfect. We could get it in super fast. All those kind of things can still happen, but just a lot of the signals that we've seen, kind of forced selling, like not like kind of panic mode, things that you see towards a bottom. Yeah. At least seasonally. So we'll see.
And let's just remind ourselves too, we had a big major switch to corn last year, a lot of corn and corn acres because we had a 591 spring guarantee, and it was just lucrative to plant more corn, and even at a really high cost, more bushels is more dollars. That's why we had a 94.6 million acreage number last year. To be at 90 million is really not that surprising from a natural rotation standpoint. To your point about that, I will say if you just take trendline yield and you just take USDA Outlook Forum numbers, we can still end at 2.5 very easily with this. So if we're in June and we're still at let's say we're at today's price 475 now, I still think there's some risk from that point on that weather remains okay. But if you're in June and we still have the same drought monitor going into Iowa, I think there's going to be a lot of people that are making a bigger deal about what a 165 or 170 potential balance sheet could look like, not 181 like the USDA Forum says. Because that usually we let emotions get the best of us, and that's why we hit 629 last year, right during the heart of that drought, last June. So,
yep. Yeah, I think it's a good time to be prepared for what those scenarios look like. If we were to spike to 520 or 550, somewhere in there, just keep in mind about the potential bearish backdrop overall on the world scenario.
Yeah.
Even though we could be friendly here, U.S., it's not a really rosy outlook long term, probably.
That's very good stuff, guys. Any other parting shots? I know we've got it was really good breakdown of the numbers. We're going to have a deeper dive here this evening. Dustin will put a write-up out for certainly our consulting clients in the evening commentaries. If you've got any questions on the report, please don't hesitate to reach out. But as we go into the long weekend here, guys, any parting shots or feeling pretty good?
Yep.
Like to see this rally.
Go ahead, Dustin.
He's cheerleading.
Yeah.
Yeah.
No, it's good stuff. Definitely a nice day for the American farmer. It was needed. We've got we'll do a quick rundown of the markets here. We got May corn's up 16.5. New crop corn's up 15.25, so 477.5 is the last there. New crop beans are up 3 3/4, up 4 1/4 now at 11.87 3/4 here. One thing to note, markets will be closed tomorrow in observance of Good Friday. And so we will reopen Sunday evening at 7 o'clock Central. The War Room will be back Monday morning, same time, 8:15 Central Time. And we'll certainly have, deeper dive, more thoughts as we've chew over this over the weekend. Hope everybody has a wonderful Easter. Thanks so much for tuning in today. And as always, we're streaming live every day the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. So everybody have a great Friday or Thursday, I should say. And we'll talk to you soon. Bye-bye.
All right. Thanks, fellas.